Good morning. Terrific Tuesday again. Welcome to today's episode of Morning Wealth. Three things that we will talk about. European Market Roundup, SMIC's 24% drop, and oil slide lower. US markets were closed, but European action was positive. So European shares closed higher on Monday, rebounding from last week's losses, with the DAX 30 adding 2% to finish at 13,100. So Euro Stoxx 600 and Euro Stoxx 50 all were higher by about 1.6%. The hope of a global economic recovery and prospects of a coronavirus vaccine and treatments was one of the main reasons why the market went up in Europe. France's Sanofi said the vaccine that it's developing with Britain's GlaxoSmithKline will cost less than 10 euros. Automaker shares were among the best performers as JP Morgan analysts said the overall tone for production outlook in the European auto sector was upbeat. On the data front, German industrial production rose 1.2% in July, further recovering from the biggest decline on record in April. Pan-continental Euro Stoxx 600 finished the day trading up 1.7%. The US futures, or the S&P 500, is up about 0.6%. The Nasdaq futures is down 0.3%. UBS's CIO says we are getting a little bit of a rotation out of the stay at home that's boding well for value and cyclical stocks. It's also good for Europe, as while infections have risen a little bit, death rates are extremely low and people are starting to focus on the recovery. China's export number came out yesterday. China's exports continued their strong performance in August as the continued global recovery boosted external demand. So exports were up about 9.5% from a year earlier, following a 7.2% increase in July. German industrial production, as I mentioned earlier, increased for the third consecutive month in July, but its recovery did lose some steam. Economists said the data suggested the German manufacturing sector was still far from a full recovery. But nonetheless, I think the positive number pushed the equity sentiment slightly higher. On the currencies front, dollar index was up by 0.4%. British pound fell 0.9% against the dollar and about 0.7% against the euro. News reports suggested a worsening risk the UK could exit a transition phase at the end of the year without striking a trade deal with its largest trading partner, which is the European Union. This, along with the prospect of potential tax hikes and rising virus cases, weighed on the sterling. Shares in SoftBank Group slipped about 7.2% in Tokyo after it was revealed that it was the investor behind a single trade which fueled the sharp rise and fall of tech stocks last week. The trade included a bet on options tied to about 50 billion worth of individual tech stocks. Shares in Semiconductor Manufacturing International Corp, which is SMIC, which is China's most advanced chip maker, fell as much as 24% in Hong Kong on Monday after the US government said it was considering placing export restrictions on the company. The step could mark a major escalation in the Trump administration's crackdown on China technology companies. BioNTech and Pfizer got the green light from German authorities to start the phase 2 trial of their coronavirus candidate in the country. The EU is close to vaccine purchase deals with the companies as well as with AstraZeneca and Moderna. Lastly, just a mention on oil prices dropped more than 1% on Monday after earlier hitting their lowest since July as Saudi Arabia made the deepest monthly price cut for supply to Asia in 5 months, while optimism about demand recovery cooled amid the coronavirus pandemic. The world's top oil exporter, Saudi Arabia, cut the official October selling price of Arab Light crude it sells to Asia by the most since May, indicating demand remains weak. Asia is Saudi Arabia's largest market by region. That's the update. Stay safe and healthy, everyone, and speak to you tomorrow.